Welcome back to Survive and Thrive. I'm Nathan Hurd, Chief Growth Officer with the Oxford Club. You know, the market conditions have been volatile at the start of this year. The markets have pulled back and they've been much choppier, as I'm sure you've seen. At the time of this filming, 200 of the 500 stocks in the S&P are down more than 10% for the year, and some are close to 50%. But no matter when you're viewing this, I want you to know that the message today applies to any market condition that feels uncertain, or anytime you feel worry creep in. This message is timeless in that regard. I want to share with you a few questions to bring into focus and answer anytime the markets wobble or things feel uncertain. By doing what I suggest here, you'll keep the focus right where it should be. You'll clear out any problematic thoughts or emotions, and you'll make good decisions that will help you thrive. Now, there are really 4 questions that you want to focus on anytime the markets and you feel uncertain, which is natural. And I'll explain exactly why each of these questions will help you strengthen your investing acumen. Number 1, what is my timeline? When you look at your investment time horizon, most corrections, most uncertainty comes and goes pretty quick. My friend and colleague, Oxford Club's chief investment strategist, Alexander Green, recently wrote about how he expects inflation to calm down throughout this year, even though it's top of the news right now. But no matter when you're watching this, if you stay focused on how long you're investing for most of you, it's at least several years, if not quite a bit more. Market forces will shake things up in the short term, but long term, we know innovation and value creation will outlast and have proven to win out over time. These bumps, when they happen, really are just bumps. And because of that, they are opportunities. That brings us to the second question. Number 2, what is my outcome? When markets feel uncertain, our brain's tendency is to intellectualize everything. Getting lost in charts and numbers, of course this matters. And of course, you should understand fully each investment you have. But what matters more is the outcome you seek. Why are you invested? Why are you investing? What outcome do you seek? And be specific here. Not just, I seek financial freedom. What level of income do you seek each year? What experiences are you hoping to allow for yourself, your family, your friends? What hobbies, passions, causes are you hoping to be more involved with? Bring those to mind. By focusing on the outcome, your reason for investing in the first place, you start to realize that the risk is inherent. The outcome is worth it. And if your timeline is a few years out, you can stay focused on the possibility which comes with any market shakeup. Now, once you've reaffirmed your timeline and your outcome, it's time to get practical. Number 3, our third question. Where is my greatest risk? As you think about your timeline and your outcome, ask yourself, where is my greatest risk? Knowing that the markets have only gone really in one direction in the long term, and for good reason, but maybe you have too much in one sector or a single position. Look closely. Remember, if you follow our pillars of wealth, you'll ideally have no more than 4% of your portfolio in any one holding. Maybe you don't have a stop-loss strategy in place. The Oxford Club suggests 25%. Maybe your investments are out of balance and you need to overall lower the risk profile. Oxford Club's chief income strategist, Mark Lichtenfeld, my colleague, has some incredible research on the bond markets coming out soon, actually, with some bond investments that have a risk-reward profile I've honestly never seen. So keep an eye out for that just a few weeks from now. But be honest in assessing where your greatest risk is. Once you've identified it, ask yourself the 4th and final question, which is, where is my greatest opportunity? Once you've reminded yourself of your timeline, your outcome, and the main reasons for investing, and you've honestly assessed your biggest risk, you should be able to see your opportunities much more clearly. And this is really what it's all about, right? The game of investing is getting to this point, honestly assessing and putting yourself in a healthy state of mind to see the opportunities you have before you. If you have stocks that get sold out in market volatility, you should have cash on hand. And even if you don't have stop losses that are actually in place, which you should, but But if you don't, you can look for opportunities to harvest tax losses and reallocate cash into stocks or other investments that have come down to attractive levels. We'll be sending you recommendations like this, of course, from every direction. So keep an eye out for upcoming trades and recommendations. I'm doing this personally right now. Identify a few of your best opportunities and get ready to make your move. So what did you think of these questions as you go through them? Click the link below and let me know how this exercise went. To review, the 4 questions are, number 1, what's your timeline? Remembering your time horizon will help bring perspective to short-term volatility. Number 2, what is your outcome? Staying connected to the specific reasons you're investing is important always, but especially when uncertainty exists. It'll help clarify what comes next, which is asking, where is my greatest risk? Looking for your biggest opportunity to shore things up or rebalance things to lower risk. This action will help answer the last question, which is, what is my greatest opportunity? What is the greatest opportunity you see? With every contraction comes opportunity. So start looking for yours, and we'll help. I hope this was helpful. And until next time, this has been Survive and Thrive. Thank you.